Okay, guys, now before we continue, I would like to tell you about Fastball. Fastball is the new financial platform that I've been using lately, and I just discovered that this is the best financial platform. Fastball offers you an economy calendar. Now, this economy calendar, you can access it by coming to this economy calendar tab, and the first thing you want to do is to change this time zone to be your preferred time zone. Now on your left here we have the time column. Now this time column shows you the exact time at which a specific event is going to be taking place. Following the time column we have the impact column. Now this impact column gives you an indication of how that economic event is going to be affecting the financial market. One star simply means that this is going to have less impact in the financial market, and 2 stars shows that this is going to be having medium impact in the financial market, and then 3 stars shows that it's going to be having high impact in the financial market. And it also offers the actual, the forecast, and the previous data values for these economic events. And this is not only helpful to fundamental traders, but it can also help you as a technical trader to know when to be active in the market and when to stay away from the market. Now, if you're interested in this amazing feature along with the best features that comes with Fastball platform, go ahead and click the link in the description and it's going to take you to this platform. Now, Fastball comes with an app that is compatible with your mobile device. Now, I'm going to leave the download link in the description box. Go ahead and click on the link and it will take you to this website. And in this website, all you gotta do is to choose your operating system, whether it's Android or iOS, and then it'll download the app and you can start enjoying the features of Fastball. Okay guys, without any further waste of time, let's get into the video. Okay, now before I continue with anything guys, I just want to say if you're new to the channel, don't forget to subscribe, don't forget to like the video, and don't forget to share so that it can reach many people, so that it can motivate us to keep on making more good videos like this. Now in this video, I am going to be giving you my free indices strategy that I use to trade on the 4 hour time frame. Okay, so this strategy works best if you want to find a higher time frame perspective, like you're looking to find the buyers. So even if you're not a higher time frame trader, you can still use this strategy to know your buyers before you dive into lower time frames to take your entries. Okay, so what I usually look for on the 4 hour time frame, I look for two most important things, and I believe many people are familiar with these things. I look for my change of characters, and I also look for my breaker of structure. Now change of character and breaker of structure is going to help you to be able to pinpoint the range that you're now dealing with. Okay, so that you avoid being confused in the market, you don't know which direction the market is heading. So for example, as you can see here, let's start with this part of the market. As you can see here, we were on an upward trend, so this was our high, this was our low. So before the market took out this high, we were focusing on this range over here. So that's how we mark our range. So this was the range that we were focusing on, and we knew that whatever buying position that was going to take place was going to take place within that range, and then we're going to push to the upside to eventually take out this high and create a break out of structure. So that's the first part. So we had a break out of structure. Now when we have a break out of structure and then we start again to retrace to the downside, our range changes, because now we create a new high and a new low. Now because we created a new high and a new low, it simply means that our range changes to be what? It changes to be this over here. So whatever happens, we are willing to take a buy within this range. Now the same thing continues up until we get where we get to this point where we take out this over here, and then we expect the market to retrace because our new range will be this high and this low. We expect to reach an area here and then use that area to buy to the upside, but our area gets violated and this low over here gets taken out. Now when it gets taken out, we all know that this is a change of character, and when this happens, we know that we are now dealing with a new range, which is this high over here and this low over here. So whatever sell position that we are going to take has to happen within this range. So the market should come back to any point within this range. So that's where we find our significant areas, and then we take sells to the downside. So it can be either this part over here, which is uh, more or less a QML, and then push to the downside. Now let's go into a real chart. I have the US30 here on the 4-hour time frame, so I'm going to show you, I'm going to apply whatever I just said right now on this pair, the US30, and I am also going to be giving you my thoughts of what I think is going to happen in the future from now. So as you can see here, we had a very clear breakout structure to the upside, a very clear breakout structure to the upside. So the market did have what after that, after the breakout structure, this is our new high, our new low. So whatever happens, we know that we are looking for buying opportunities within this range. Okay, so it simply means the market came back into a significant order block, which was this part. So here we have a hidden order block. It's a hidden order block because of this long wick over here. So if you dive into a lower time frame, you're gonna find that there is an order block within this long wick. Okay, then after tapping into that, what did the market do? The market went to take out this high over here, and then it created a breakout of structure to the upside, and then it came all the way to this point. And when it came all the way to this point, then it changed our what? It changed our high and our low. Now we have a new high, and then we have this low over here. And then because of that, then our range changes. We are now focusing on these 2 points here to find our trade. Now this is where we come and mark our significant areas. I would mark this one as my significant area, and as you can see, after that, we had a minor retracement to the downside, and then this here got taken out, this part over here got taken out. But I wouldn't consider this as a clear breakout of structure because the market didn't retrace to at least 50% of this range over here. So this is just a shallow pullback. Now this is to induce liquidity in the market so that it can give you the false impression that we have changed character to the downside, so that you can start looking for certain opportunities. So as you can see here, this here is now where we are having a serious retracement, and then we can expect to start selling from to start buying again to the upside, because this retracement we expect to start buying from this part all the way to the upside, or this part to this order block all the way to the upside. Now I would personally look for buys on this order block over here, because I believe that this first order block is just going to be used as liquidity to manipulate traders into taking positions. So this is what you can expect on that level, and then a push to the downside into this order block, and then we finally head to our take profit. So our buy would be somewhere here, and our stop loss would be below this low over here, and then that is going to be our take profit. But however, guys, you know how we do it. We go to a lower time frame, we analyze there, we find a proper entry with low risk and higher risk reward ratio. So this could actually be flipped the moment that it's like 1 is to, let me see, uh it's 1 is to 5. But if you refine your order block, you're gonna end up with something like 1 is to 20 or something of that sort. Now the other reason why I think this order block is going to hold and it's going to be, it's the most probable order block, is because it's accompanied with a QML. As you can see on this zone over here, we have a QML right on the zone. And for those who are trading sensitive areas, you know, those who are going with multiple touches, you can see we have many touches on that order block. So we have this touch over here, we have this touch, we have that touch, we have this touch, this touch. So we have more than 7 touches, which makes it an order block that is most probable to hold. So these 2 points here are most likely going to be used as liquidity. So that's what I think is going to happen in the US30. I think people should look for buying opportunities from this level all the way to the upside, and then you can hold this trade. I think it can play out within a week or two, and then after that you're gonna be in deep profit. Now I'm gonna go to a different time frame. I'm gonna go actually a different pair. I'm gonna go to NASDAQ now, and I'm gonna do the same thing and then show you what I think is going to happen in the market. Okay guys, so here we are on the 4-hour time frame of NASDAQ. As you can see, we had this breakout of structure here, and this breakout of structure was caused by a reaction on this order block that we had over here. Okay, so as you can see, after this reaction on the order block, our point of interest, our high, this was our high, and our low, so this was our new range. It simply means whatever buying opportunity that was to take place was going to happen within this range. So as you can see, the buying opportunity did take place around this QML level, around over here at a QML level, and then we push to the upside, and then we broke structure again to the upside. And then this is that important thing that I talked about. As you can see here, we have this part where we are being wicked out here, and this is not a breakout of structure. It's just a what a we just the market wicking us out, and this way is trying to induce us into believing that the market did break structure, of which it did not. And then the same thing happened. We now have our new high and our new low, our new high, our new low. Okay, so we mark out our significant points. In this case, I would have marked this order block and also this point over here. As you can see, the market did not come back to this area. It's something that happens sometimes. The market doesn't come to our area, but it did have a clear break out of structure to the upside. So this level over here, the market decided to react on this level over here, which might look like a breaker block, and then push to the upside to create what a break out of structure. So here we have a break out of structure here. Now as you can see, that changes our new high and our new low. So now we have this new high, new low. So whatever buying opportunity that's going to take place has to happen within this area. Now with that being said, it simply means we have to find our significant point, and for our significant point, I would choose this part over here, this order block here, as our significant point. So I expect the market to come to somewhere here, or when it gives us an enough indication that it's going to be to the upside, like a change of character on the lower time frame. This would have been our buying opportunity. But I still strongly like, as you can, you know that there's a bit of correlation on the US30 and the NASDAQ. So I still feel like the market is going to push to the downside here, induce this order block over here, then tap into this, and then continue to the upside like that. So that's what I think is going to happen, so that we can take out the structure, create a breaker of structure. So I think that this is going to be our point of interest. As you can see, it is followed by a serious imbalance or price inefficiency, and alongside we also have QML level over here. So as you can see, this point over here is our QML level, so we are expecting to see the market come into this area and then start pushing to the downside. So once it crosses this blue line that I have over here, this is why I'm going to dive into the lower time frame, like the 15 minutes, and then start looking for something like this. Let's say the market was coming like this, and then it takes out that. Now this is our change of character, and then tap on that and then push to the upside. So that's the structure I'm going to be looking for on a lower time frame. So there you have it, guys. This is what I think is going to happen on NASDAQ.